Hey everyone, and welcome back to TalkTickers, your one-stop shop for all things earnings calls. Today, we're going to be diving deep into Royal Caribbean Cruises' Q4 2024 report, and let me tell you, this one was a wild ride.
It definitely was. Get ready for record revenues, surprising new venture, and some serious insights into the future of the cruise industry.
Okay, so let's unpack this, starting with a quick recap of Royal Caribbean's performance in Q4 and all of 2024.
Well, to put it simply, they had a record-breaking quarter, which really capped off a truly incredible year for them. They hosted a whopping 8.6 million vacationers, saw an 11.6% increase in net revenue per passenger, and generated over $5 billion in operating cash flow.
Wow, those are some serious numbers.
Yeah.
And on top of that, they've managed to get their balance sheet back to what's considered investment grade, which I know is a big deal in the financial world.
Absolutely. It shows they're in a really strong financial position, which is even more impressive considering they hit their trifecta goals a whole 18 months ahead of schedule.
Okay, wait, hold on. Trifecta goals. For those of us who don't speak fluent finance, what does that even mean?
Good point. Basically, it means they achieve their targets for return on invested capital, net revenue yield, and leverage, which are all key indicators of a company's financial health and profitability.
So they're not just sailing smoothly, they're exceeding expectations in a big way.
Exactly. Now, amidst all this positive financial news, they dropped a bombshell announcement: the launch of Celebrity River Cruises.
Okay, now this is where it gets really interesting. Tell me more about this whole river cruise venture.
Well, they're not just dipping their toes in the water. They've placed an initial order for 10 brand new river cruise ships, with plans to start sailing in 2027.
10 ships. That's a serious commitment. What's the thinking behind this move?
It's all about expanding their vacation ecosystem. They're seeing a huge opportunity in the river cruise market, especially among travelers who already love ocean cruising, and they want to capture that demand.
It makes sense. They've already got the brand recognition, a loyal customer base, and a global network. So why not leverage that for river cruises too?
Exactly. And they're not just replicating the standard river cruise experience. They're describing these new ships as transformative, inspired by their popular Edge-class ocean liners, known for their modern design and innovative features.
So they're bringing that signature celebrity luxury and innovation to a whole new market.
Precisely. And they see this as a high-margin, high-return opportunity with some serious potential for market share growth.
It's a bold move for sure, but it seems like a calculated risk, given their track record and the booming river cruise market.
Absolutely. Now let's take a deeper dive into those impressive financial numbers and try to understand what's fueling Royal Caribbean's continued success.
All right, let's break it down. They mentioned double-digit yield growth in 2024, bringing in $500 million more in revenue than they initially expected. That's impressive.
It is, and all of their brands are performing exceptionally well. It's being driven by their laser focus on what's called margin expansion. This basically means they're finding ways to increase their profits without necessarily raising prices.
So they're becoming more efficient and squeezing more profit out of each dollar they earn? That makes sense.
Right, and they're not just resting on their laurels either. They're already seeing record-breaking bookings for 2025, which is a great sign.
So the momentum is still going strong. What's their secret sauce? What's driving this continued success?
Well, there are a few factors at play here. First, the economy is doing well, with high employment and wages, meaning people have more money to spend on travel.
And after years of travel restrictions, people are really prioritizing those travel experiences, especially those multi-destination trips that cruising offers.
Exactly. Cruises are becoming increasingly popular too, especially among younger travelers who are looking for unique and adventurous vacations.
So Royal Caribbean is perfectly positioned to benefit from this travel boom with its diverse brands, innovative ships, and those exclusive destinations they've developed.
Right. And they've been making some strategic investments to ensure their continued growth. We're talking about a whopping $5 billion allocated to new initiatives and maintaining their existing assets.
$5 billion. What are they planning to do with all that money? Are we talking more of those mega ships?
Well, yes, they've got 2 new ships on the horizon, Star of the Seas and Celebrity Excel, but they're also expanding their private destinations, which are proving to be incredibly popular.
You mean those exclusive beach clubs and island experiences that Royal Caribbean offers?
Exactly. They've recently acquired a port in Costa Maya. They're building beach clubs in Cozumel and Nassau. And of course, there's the famous Perfect Day at Coco Cay.
So they are building an entire vacation ecosystem around these destinations.
Absolutely, and it's clearly paying off. They're projecting a 23% earnings growth in 2025, a 5% increase in capacity, and yield growth between 2.5% and 4.5%. That's impressive growth while maintaining a cautious approach to costs.
Sounds like they have a solid plan and are executing it well. All right, let's move on to the Q&A portion of the earnings call where analysts had a chance to ask some more specific questions.
That's where things get really interesting. We'll hear what Wall Street is most curious about and how Royal Caribbean responds to their concerns.
Sounds good. Let's dive in.
First up, we have Brant Montour from Barclays, and he's got a couple of insightful questions about their yield guidance for 2025.
Okay, and yield refers to the average revenue they make per passenger, right?
Yeah.
What's he asking about specifically?
Well, they're projecting yield growth between 2.5% and 4.5% for 2025, which some analysts found to be a bit conservative considering the strong demand they saw in the last quarter of 2024.
So they're wondering if Royal Caribbean is being a little too cautious with their projections.
Exactly. Brand wanted to understand how they arrived at that figure and what factors they were considering.
What did Royal Caribbean have to say about that?
Jason Liberty, the CEO, acknowledged that the strong demand in Q4 did raise the bar for comparisons. They're essentially facing tougher year-over-year comparisons.
Because last year's performance was so exceptional, it's harder to show significant growth this year.
Right. They're coming off some truly incredible comps. Remember, in 2023, their yields improved by 13.5%, and last year they saw an 11.6% jump.
So it's not that they're expecting things to slow down dramatically, it's just that they're working with a higher baseline now.
Exactly. And they pointed out that their load factors, meaning how full their ships are, have already recovered. So they can't rely on filling empty cabins to boost yields further.
That makes sense. They can't squeeze more people onto the ship, so the yield growth has to come from somewhere else.
Right. But here's the good news. It's still early in the wave season, which is the peak booking period for cruises, and they are seeing incredible booking activity.
So they're optimistic about the future.
Very much so. They just had their highest booking week ever during wave season, which is a very encouraging sign.
Wow. So it sounds like they're confident in that 2.5% to 4.5% yield growth range, even with the tougher comparisons.
Absolutely. And they haven't even factored in any potential share buybacks, which could provide an additional boost to earnings per share.
Hold on. Share buybacks. Can you explain that in plain English?
Sure. When a company buys back its own shares, it reduces the number of shares outstanding, which can increase the earnings per share for the remaining shareholders.
Ah, so it's a way for them to potentially boost their earnings even further without actually increasing their profits.
Exactly. Now, Brant's second question focused on that exciting river cruise venture, specifically how Celebrity River Cruises would position itself within the existing market.
Right. There are already some established players in the river cruise space. How are they planning to differentiate themselves?
Well, Brant pointed out that there's already a prominent competitor in the luxury river cruise space. And Celebrity's ocean pricing is typically a bit lower, more in line with what's considered the premium segment.
So he's wondering how Celebrity River Cruises will stand out and what kind of pricing strategy they'll be using.
Exactly. And Jason Liberty emphasized that they've done their research and see a real opportunity to elevate the river cruise experience with their Celebrity brand.
So they're aiming for that luxury market.
Yes, but with a Celebrity twist. He pointed out that Celebrity's ocean pricing isn't directly comparable because it's not an all-inclusive product like most river cruises are.
Ah, that's an important distinction. So when you factor in the all-inclusive aspect, their river cruise pricing is likely to be higher than their current ocean pricing.
Precisely. He also highlighted the opportunity to bring Celebrity's signature design, culinary excellence, and entertainment to the river cruise market, raising the bar for the entire industry.
So they're not just copying what others are doing, they're bringing their own strengths and expertise to the table.
Right, and they've got a built-in advantage with their massive customer base and loyalty program, which they can leverage to generate demand for their river cruises.
They're not just chasing after existing river cruise customers, they're tapping into their existing ocean cruise market and expanding their ecosystem of vacation experiences.
It's a smart move, leveraging their existing assets to enter a new market.
Let's move on to the next analyst, who's got questions for Royal Caribbean.
All right. James Hardiman from Citi also had some intriguing questions about the river cruise announcement. He was particularly interested in the timeline and the specifics of the experience.
So when can we expect to see these new river cruise ships in action?
Well, they're planning to deliver a couple of ships in 2027 and then ramp up to around 4 ships per year.
So by 2030, they'll have all 10 ships sailing.
Right, and they've emphasized that this initial order of 10 ships is just the beginning. They're serious about this venture and see significant potential for growth in the river cruise market.
2027 is going to be a busy year for them. They've got Icon of the Seas launching their new private destination in Mexico, and now these river cruises.
It's like a symphony of vacation experiences all coming together.
James also asked about the details of the celebrity river cruise experience. Things like, will kids be allowed? Who are they targeting as their ideal customer? And what's the overall vibe they're aiming for?
Great questions. Jason explained that their approach to attracting customers would be similar to what they do on the ocean side. They'll leverage their global network and sophisticated pricing tools to attract the most profitable guests from around the world.
So they're not just focusing on one specific region or demographic.
No, they're casting a wide net. He also emphasized that these ships are smaller than their megaships, holding around 180 passengers, which gives them more flexibility in terms of itineraries and marketing.
That makes sense. They can offer more specialized and unique experiences with smaller ships.
Exactly. And while kids are sometimes allowed on celebrities' ocean cruises, the focus of their river cruises will be on creating elevated experiences that appeal to a more discerning traveler.
So think upscale amenities, fine dining, immersive entertainment, and seamless connections between the ship and shore excursions.
Right. They're aiming to redefine what luxury means in the river cruise space, and based on the initial feedback from their travel partners and customers, it seems like they are on the right track.
Sounds like they've hit a sweet spot with this announcement. Okay, let's move on to the next analyst. Who's up?
Next, we have James Hardiman again from Citi, and he's got a question about their capital expenditures, which is a fancy way of saying they're spending on big projects.
Okay, how much are they planning to spend and what are they spending it on?
Well, they're projecting a whopping $5 billion in capital expenditures for 2025, with $3.4 billion going towards new ships and $1.6 billion for other projects.
So those other projects include things like their private destinations and upgrades to existing ships.
Exactly. James was trying to understand how that spending might evolve over the coming years, especially considering their ambitious growth plans.
It's a valid question. $5 billion is a lot of money. What did they say about that?
Naftali Holtz, their CFO, explained that the $5 billion figure includes commitments for the delivery of those two new ships we mentioned, Star of the Seas and Celebrity Excel, both of which already have financing in place.
So that money's already accounted for. What about the rest?
Well, he emphasized that their non-ship spending is driven by a combination of maintenance and strategic investments in their private destination portfolio.
So things like acquiring that port in Costa Maya and developing those beach clubs in Cozumel and Nassau.
Exactly. Those projects require significant upfront investment. They're also restarting their modernization program, which involves upgrading existing ships and further enhancing the guest experience.
It sounds like they're investing heavily in both the future and the present.
They are, and even with all these investments, they're confident in their ability to generate strong cash flow and maintain a healthy balance sheet.
That's reassuring to hear. They're balancing growth with financial responsibility.
Right, and that's a key reason why investors are so confident in Royal Caribbean's future.
All right, let's move on to the next analyst.
Next up, we have Steve Wyszynski from Stifel. He was curious about their earnings per share guidance, which came in better than expected despite some challenges with currency exchange rates and fuel prices.
So he's wondering how they managed to beat expectations despite those headwinds.
Exactly. He also wanted to know if they had factored in any potential share buybacks or debt refinancings into their guidance, which could further boost their earnings per share.
So is there a chance their earnings could be even higher than they're projecting?
Potentially. Jason clarified that their current guidance does not include any assumptions for those types of financial maneuvers.
So any share buybacks they make would be an added bonus for investors.
Precisely. And NAV emphasized that their formula for success, moderate capacity growth, moderate yield growth, and strict cost control is what's driving their strong performance.
So they're not trying to grow too quickly or get ahead of themselves. They're taking a measured and disciplined approach.
Exactly. Now, Steve also had some questions about that river cruise venture. Specifically, he was wondering about their berthing rights, which is a fancy way of saying their ability to dock at specific ports along the rivers.
Ah, that's essential for river cruises, right?
Mm-hmm.
You need to be able to stop at those charming towns and historical sites.
Absolutely. He also wondered if they might consider expanding their ultra-luxury brand, Silver Sea, into the river cruise market at some point.
So he's thinking long-term and about the potential for other brands to join the river cruise party.
Right. And Jason addressed those questions head on. He confirmed that they wouldn't have announced this new venture without securing the necessary berthing rights.
So they've done their homework and they're ready to hit the ground running.
Exactly. And while their initial focus is on building the Celebrity River Cruise brand, they are open to exploring opportunities for Silversea down the road.
Makes sense, one step at a time. Build a solid foundation with Celebrity River Cruises and then see what other possibilities emerge.
Right. Now, Steve also made an interesting observation about the different demographics that river and ocean cruises typically attract.
What's the difference?
Well, he pointed out that Viking, a major player in the river cruise market, tends to attract an older demographic, while Celebrity skews a bit younger.
So he's wondering if Celebrity might see an opportunity to target a different segment of the river cruise market, perhaps a younger, more experience-driven crowd.
It's a valid point. And Jason responded by emphasizing that they are not going after a specific competitor's customer base. Their goal is to leverage their existing brand loyalty and global network to attract a new segment of travelers to the river cruise experience.
So they're not trying to steal customers from Viking or anyone else. They're trying to expand the market and bring new people into the fold.
Exactly. They believe the market is large enough to support multiple players with different approaches.
That's not a zero-sum game. There's room for everyone to succeed.
Right. And with their unique brand positioning and focus on elevated experiences, they're confident they can attract a new generation of river cruisers.
All right, let's hear from another analyst. Who's next?
Next up, we have Matthew Boss from JP Morgan, and he's got some high-level questions wanting to get a better sense of the big picture.
Okay, what kind of big picture questions is he asking?
Well, he was curious about any specific areas where they were seeing notable acceleration in demand for 2025.
So is there a particular region or type of cruise that's really hot right now?
That's what he wanted to know. He also asked for their perspective on how much of their overall market share opportunity they've captured so far in that massive $2 trillion global vacation market.
Wow, $2 trillion. That's a huge market.
Yeah.
So he's thinking about both the near-term trends and the long-term potential.
Exactly. And Jason highlighted that they're seeing strong demand across all of their products and destinations.
So it's not just one specific area that's driving their success. It's a broad-based recovery.
Right. The Caribbean is performing exceptionally well, thanks in part to those private destinations and innovative ships.
That makes sense. People love those exclusive beach clubs and island experiences.
But they're also seeing strong growth in Alaska, Europe, Southeast Asia, Australia, New Zealand, and even China.
It's a global phenomenon. People are eager to travel, and they're choosing Royal Caribbean.
They are. And in terms of specific markets, they're seeing healthy demand from both Europe and the U.S.
So it's not just one region that's driving their growth. It's a truly global recovery.
Right. They're also leveraging technology to enhance the guest experience and personalize their marketing, which is helping them attract new customers and encourage repeat bookings.
It sounds like they're firing on all cylinders. What do they say about their overall market share opportunity?
Well, Jason believes they are still in the early innings.
So there's still a lot of room for growth.
Absolutely. There's a huge potential market out there, and they are constantly innovating and expanding their offerings to capture a larger slice of the pie.
It's an exciting time to be a part of the Royal Caribbean story, and it seems like they have no plans of slowing down.
Now let's hear from another analyst. Robin Farley from UBS has a lot of questions specifically about the River Cruise launch.
Okay, what's she curious about?
Well, she's digging into the details, trying to understand their plans and the financial aspects of this new venture. Her first question was about the timeline for additional orders beyond those initial 10 ships.
So is 10 ships the limit, or are they planning to expand even further?
Well, she pointed out that river cruise ships have a shorter lead time than ocean liners, meaning they can be built more quickly. So they could potentially wait until the first ships launch in 2027 before placing more orders.
So they could play it safe and see how the first 10 ships perform before committing to more.
Right. But Jason quickly clarified that they will not be waiting until 2027 to order more ships.
Wow, they're really going all in on this river cruise venture.
They are. They're already planning for further expansion in this market and see it as a long-term strategic priority.
That's a big commitment. What's driving this confidence?
Well, he explained that the cost per passenger for these river cruise ships is significantly lower than their ocean liners.
So they can scale up this business relatively quickly without breaking the bank.
Exactly. And While he didn't disclose specific costs, he emphasized that the financial aspects of river cruising are very attractive, with strong profit margins and good potential for return on investment.
It sounds like they've crunched the numbers and they like what they see.
They do. He also noted that river cruise ships typically don't operate year-round, which could be a consideration as they build out their fleet and itineraries.
That's an interesting point. What are they going to do with those ships during the off-season?
Well, they're already thinking about ways to maximize utilization during those slower periods, perhaps by exploring new destinations or creating unique experiences that are only available during certain times of the year.
So they're not just going to let those ships sit idle. They're going to find creative ways to keep them generating revenue.
Exactly. They're not just copying the existing river cruise playbook, they're looking for ways to innovate and differentiate themselves.
That's what they do best. Okay, what else did Robin want to know about the river cruises?
She also asked about the potential yield premium for their river cruises, considering they'll be offering a more inclusive product and targeting a higher-end customer.
So will those river cruises generate more revenue per passenger than their ocean cruises?
That's the question. And Jason confirmed that they expect their river cruises to be a yield tailwind for the business.
Meaning they're projecting higher yields on those river cruises compared to their overall fleet average.
Precisely. They also expect the profit margins and return on investment for their river cruises to be similar to, if not better than, their ocean cruises.
It sounds like they've thought through the economics of this venture very carefully, and they're confident it will be a profitable addition to their business.
Absolutely. Now let's hear from Connor Cunningham from Milius Research. He wanted to understand their cost guidance a bit better.
Cost guidance? What does that mean?
Essentially, it's their projection of how much they expect to spend on operating their business.
Okay, so what's he curious about?
Well, he was intrigued by their projection of flat to slightly up net cruise costs for the full year, especially considering some of the challenges they faced in 2024.
So he's wondering why they're not expecting costs to increase more significantly, given the rising costs of things like fuel and labor.
Exactly. He asked for some more detail on how their costs might fluctuate throughout the year and what factors they had considered.
What did they say about that?
Jason explained that the timing of their costs is mainly influenced by their dry dock schedule.
Dry dock schedule? That refers to when they take the ships out of service for maintenance and upgrades, right?
Exactly. They have more dry dock days scheduled for the second and third quarters, which will temporarily drive up costs.
Makes sense. Those dry dock periods are expensive.
Right. But those higher costs will be balanced out by the lower dry dock activity in the first and fourth quarters.
So it all evens out over the course of the year.
Right. He also noted that they're acquiring that port in Costa Maya, which will become operational this year, and that will add to their costs as they ramp up operations.
New ventures always come with some initial expenses.
True. Plus, there will be some ramp-up costs associated with their new beach clubs as they prepare for their openings later this year.
But overall, they're managing those costs carefully and are committed to maintaining strong cost discipline.
Absolutely. Their focus is on expanding their profit margins, and they believe their scale and operational efficiency will allow them to achieve that.
Okay, so they're keeping a close eye on their spending, even as they invest in these new projects.
Right. Now, Connor also asked about the specific impact of stock-based compensation, which was a factor affecting their costs in 2024.
Stock-based compensation. Can you explain that one?
Sure. It's basically when companies give their employees stock options or other stock-based awards as part of their compensation package.
Okay, and how does that affect their costs?
Well, those stock-based awards have to be accounted for as an expense, which can impact the company's overall profitability.
Ah, I see. So Connor wants to know if they've factored that into their cost projections for 2025.
Exactly. And Jason confirmed that their current guidance does not include any assumptions for stock-based compensation.
So if their share price continues to perform well, which is great for investors, it could potentially increase their costs.
Right. But they're monitoring that closely and will adjust their guidance if needed.
It sounds like they're on top of things.
Yeah.
Okay, what else did Connor want to know?
He also circled back to the river cruise discussion, this time focusing on demographics and how celebrity might differentiate itself.
All right, we talked about that earlier with Steve. What new insights did they offer?
Well, Connor pointed out, again, that Viking, a major river cruise operator, targets an older demographic, while Celebrity's customer base skews younger.
So he's wondering if Celebrity might tailor their river cruise experience to a younger, more experience-driven crowd.
Exactly. And Jason emphasized that they are not focused on going head-to-head with any specific competitor. They believe the river cruise market is large enough to support multiple players and are confident they can attract a new segment of travelers.
So they're not just trying to steal customers from Viking or anyone else. They're trying to expand the market and bring in a new audience.
Right. He pointed out that Celebrity's customer base is already quite diverse with an average age in the early to mid-50s, but they have a wide range of ages represented on their ships.
So they're not just appealing to one specific age group.
No, they're casting a wider net. They believe their brand, which is known for its modern design, innovative features, and focus on culinary and entertainment experiences, will naturally appeal to a younger, more discerning traveler.
So they're not trying to be everything to everyone. They're focusing on creating a specific type of experience that they believe will resonate with a new generation of river cruisers.
Exactly. They're carving out their own niche in the market.
Okay, let's move on to the next analyst.
Next up, we have Ben Chaikin from Mizuho, and he's got some interesting questions about Royal Caribbean's private destinations, particularly the new beach club in Nassau.
Ah, those exclusive beach experiences are becoming increasingly popular.
They are. He was curious about their pricing strategy for this new offering, which includes all-inclusive food, drinks, and beach access.
Sounds like paradise. So how much will it cost to experience this slice of heaven?
Well, Michael Bailey, the president and CEO of Royal Caribbean International, chimed in to address those questions.
Okay, what did he have to say?
He explained that they will be releasing pricing details in April when they open up bookings for the beach club.
So stay tuned for more information on that. What else did Ben want to know?
He also wanted to understand the volume of passengers that currently visit Nassau and how much of that traffic they expect to capture with their new beach club.
So he's thinking about the potential demand for this new destination.
Exactly. And Michael shared that their Royal Caribbean brand alone sends a significant amount of traffic to Nassau, far exceeding the capacity of the beach club.
So they're not worried about filling it up.
Not at all. They expect to welcome approximately 1 million guests to the beach club in its first full year of operation.
Wow, that's a lot of beachgoers.
It is. And it's worth noting that the beach club is designed to complement their perfect day at Coco Cay destination.
Right, that's their private island in the Bahamas.
Exactly. Many of their shorter itineraries will include stops at both destinations, creating a truly unforgettable vacation experience.
So you can have your perfect day at Coco Cay and then relax at the beach club in Nassau.
Exactly. Ben also asked about the cost dynamics of your beach club compared to Coco Cay, considering its smaller scale and potential for operational efficiencies.
So is it cheaper to operate a beach club than a private island?
Well, Nav explained that the main difference between the two destinations is volume. Coco Cay is expected to host 3.5 million guests in 2025, while the Nassau Beach Club will welcome around 1 million to 1.5 million guests.
Okay, so Coco Cay has a significant scale advantage, which can lead to lower costs per guest.
Right. That scale advantage at Coco Cay allows them to achieve greater operational efficiencies, but they still expect the Nassau Beach Club to be a profitable and accretive investment.
Accretive, what does that mean in this context?
It means it will add to their earnings per share, which is good news for investors.
Got it. So they're confident that both Coco Cay and the Nassau Beach Club will be successful ventures.
Absolutely. The proximity of the beach club to their ships also reduces transportation costs, which further enhances its profitability.
It sounds like they've thought through all the angles. Okay, who's next on the analyst roster?
Let's hear from Vince Sepiel from Cleveland Research. He was interested in their loyalty program and its impact on customer behavior.
Loyalty programs are a big deal in the travel industry. What specifically did he want to know?
He wanted to know if they'd seen any measurable changes in things like share of wallet, repeat booking behavior, and crossover between brands since they made changes to their loyalty program earlier this year.
Share of wallet, crossover between brands. Can you break those down for us?
Sure. Share of wallet refers to the percentage of a customer's total spending on travel that goes to a particular company. So if someone spends $10,000 on travel in a year, and $5,000 of that goes to Royal Caribbean, their share of wallet for Royal Caribbean would be 50%.
Okay, that makes sense. And what about crossover between brands?
That refers to customers who book trips with multiple brands within the same company. So if someone goes on a Royal Caribbean cruise one year and then a Celebrity cruise the next year, that would be considered crossover.
Got it. So Vince is wondering if the changes to their loyalty program have encouraged customers to spend more money with Royal Caribbean and book trips with multiple brands.
Exactly. And Jason shared that they've been very pleased with the response to their updated loyalty program. While he declined to share specific metrics, he emphasized that the program has been grossly successful in terms of reciprocity.
So they're seeing a lot of crossover between brands.
That's what it sounds like. It's clear they're a bit hesitant to give away too much information about the program's success, but their enthusiasm speaks volumes. They've seen a significant increase in awareness among their customers about the connection between their Royal Caribbean, Celebrity, and Silversea brands.
So people are becoming more aware that these brands are all part of the same family.
Right. And the changes to the loyalty program are incentivizing customers to stay within their ecosystem of brands.
Meaning they're more likely to book another trip with Royal Caribbean, Celebrity, or Silversea instead of going to a competitor.
Exactly. They're seeing more repeat bookings and a higher share of wallet from their loyal customers, which is precisely what they were hoping for.
Sounds like a win-win for both the company and the customers.
Absolutely. The loyalty program is playing a key role in strengthening their customer relationships and driving long-term growth.
It's a smart strategy, rewarding your loyal customers and encouraging them to stick around.
Right. Okay, now Vince also asked about the potential impact of their new Perfect Day destination in Mexico on their Western Caribbean itineraries.
Right, that's their second private destination after Coco Cay in the Bahamas.
Exactly. He pointed out that the Western Caribbean currently represents about 30% to 35% of their Caribbean capacity.
So a significant portion of their business is concentrated in that region.
Right. And he wondered how much of a boost they expected to see from Perfect Day Mexico as it ramps up.
So will this new destination attract even more people to the Western Caribbean?
That's the question. He was also curious about their projections for the ultimate capacity of Perfect Day Mexico, given the success of Coco Cay.
Coco Cay has been a huge hit, so he's wondering if Perfect Day Mexico has the potential to be even bigger.
Exactly. And Michael Bailey shared that they have high hopes for Perfect Day Mexico. They believe it has the potential to attract even more guests than Coco Cay, thanks to its larger scale and unique offerings.
So they're not just replicating Coco Cay, they're creating something even grander.
Exactly. The addition of Perfect Day Mexico will also allow them to offer a wider variety of itineraries and attract new customers to the Western Caribbean.
So it's not just about attracting more people to the same itineraries, it's about expanding the options and creating new experiences.
Precisely. They're already seeing strong demand for their Western Caribbean sailings, and they expect that demand to increase further with the opening of Perfect Day Mexico.
It sounds like a strategic bet on a popular cruising region that's likely to be a significant driver of growth for them in the coming years.
Absolutely. Perfect Day at Coco Cay has been a phenomenal success, and they are confident that Perfect Day Mexico will be just as popular, if not more so.
They're creating destinations that are unlike anything else in the cruise industry, and they're constantly innovating to stay ahead of the curve.
It's clear that they're thinking about every aspect of the guest experience, from the big picture to the smallest details.
And that attention to detail is a big part of what makes Royal Caribbean so successful.
Okay, so we've covered a lot of ground here. We've talked about their record-breaking financial performance, their exciting new ventures, and their responses to some tough questions from analysts.
It's been a whirlwind tour of their business, and it's clear that they're firing on all cylinders.
But I'm curious, what are your key takeaways from all of this? What stood out to you as particularly noteworthy?
Well, a few things really jumped out at me. First, their commitment to innovation is truly impressive. They're not just content with being a leader in the cruise industry, they're actively pushing the boundaries and creating entirely new categories of experiences.
Like those private destinations and now the river cruises. It's like they're constantly reinventing themselves.
Yeah.
Exactly. And that's essential in an industry as competitive as travel. You can't just rest on your laurels. You have to keep evolving and offering something fresh and exciting to keep customers coming back.
And it seems like they're doing a great job of attracting new customers while also keeping their loyal fans happy.
Absolutely. And that leads me to my second takeaway. Their focus on building a loyal customer base through their expanded loyalty program and curated experiences is clearly paying off. They're creating a sort of ecosystem where once you're in, you don't want to leave.
It's like they're building a community of Royal Caribbean enthusiasts who are eager to experience everything the brand has to offer.
Exactly. And that kind of loyalty is incredibly valuable in any business, especially in travel, where word-of-mouth recommendations and repeat bookings are crucial.
Okay, so innovation and customer loyalty. Got it. What else stood out to you?
Their financial discipline. They're investing heavily in growth, but they're also managing their costs carefully and maintaining a strong balance sheet.
So they're not just throwing money at every shiny new project. They're being strategic. and making sure they're getting a good return on their investments.
Right, and that's reassuring for investors. It shows they're not just focused on growth at all costs, they're also committed to profitability and sustainability.
That's a good combination.
Yeah.
They're walking that tightrope between ambition and caution.
And they seem to be doing it quite well. Their formula of moderate capacity growth, moderate yield growth, and strict cost control is clearly working.
It's a recipe for success. All right, so we've talked about the good, the impressive financials, the innovative projects, the strong customer loyalty. But is there anything that concerns you? Any potential red flags or challenges they might face?
Well, every business faces challenges, and Royal Caribbean is no exception. One potential concern is the increasing cost of fuel. It's a major expense for cruise lines. And if fuel prices continue to rise, it could eat into their profits.
That's a valid point.
Yeah,
Fuel prices are notoriously volatile, and it's something they'll need to manage carefully.
absolutely. Another potential challenge is the competitive landscape. The travel industry is incredibly competitive, with new players emerging all the time. Royal Caribbean needs to stay ahead of the curve and constantly innovate to maintain its market share.
Right, they can't afford to get complacent. They need to keep pushing the boundaries and offering those unique experiences that set them apart from the competition.
Exactly. And then there are always external factors that are beyond their control. Things like economic downturns, geopolitical events, or even natural disasters could all impact their business.
Those are the wildcard factors that every business has to deal with.
Right. And it's important to remember that even the best laid plans can be disrupted by unforeseen events.
Okay, so fuel costs, competition, and external factors, those are definitely things to keep an eye on. But overall, it sounds like you're optimistic about Royal Caribbean's future.
I am. They're a well-managed company with a clear vision and a strong track record of success. They're investing in the right areas, they're focused on their customers, and they're navigating the challenges of the travel industry effectively.
It sounds like they're in a good position to continue riding the wave of the travel boom.
Absolutely. Now, before we wrap up, let's have some fun. It's time for our This Is Not Financial Advice segment.
All right, I love this part. Give us your wildest but most plausible trade idea based on what we've learned today.
Okay, here's a thought. And remember, this is just speculation, not financial advice. What if Royal Caribbean decides to take their ecosystem strategy to the next level and make a bold move into the land-based vacation market?
Wow, that's a big leap. You're talking about them competing with companies like Disney or Universal.
Exactly. Imagine them creating their own version of a theme park or resort experience, leveraging their expertise in creating immersive vacation experiences.
That's a bold prediction,
Yeah.
but it's not entirely out of the realm of possibility.
Yeah.
They've already shown they're not afraid to disrupt established industries and push the boundaries of what's possible.
Right, and think about it. They could leverage their existing customer base, their loyalty program, and their brand recognition to create a truly unique vacation destination.
They could even offer package deals that combine cruises with stays at their land-based resorts, creating a seamless and unforgettable vacation experience.
Exactly. It would be a natural extension of their existing ecosystem, and it would allow them to tap into a whole new market of travelers.
That's a very interesting idea. Of course, it's all speculation at this point, but it's definitely something to keep an eye on.
It would be a game changer for the travel industry. All right, that wraps up our deep dive into Royal Caribbean's Q4 and full year 2024 earnings call.
It's been an exciting journey filled with impressive numbers, innovative projects, and thought-provoking questions.
We've covered a lot of ground today, from their financial performance to their strategic initiatives, and even some wild speculation about the future.
But before we sign off, let's leave our listeners with something to ponder. What's one big question that they should be thinking about after listening to this episode?
Here's a thought-provoking question for you all. How will the travel industry evolve over the next decade, and what role will companies like Royal Caribbean play in shaping that evolution?
That's a great question. The travel industry is constantly changing, driven by factors like technology, demographics, and evolving consumer preferences.
Right, and companies like Royal Caribbean, who are at the forefront of innovation and customer experience, will have a significant impact on how we travel in the future.
It's an exciting time to be a part of the travel industry, and it'll be fascinating to see how it all unfolds.
Absolutely. So for all of you travel enthusiasts and armchair investors out there, keep exploring, keep learning, and keep dreaming of those incredible vacation experiences.
And who knows, maybe one day you'll be sipping a cocktail on a Royal Caribbean megaship or lounging on the beach at their newest private destination. Until next time, happy travels.
Until next time, happy travels. And don't forget, tune in next week when we'll be dissecting the latest earnings call from another major player in the travel industry.
That's right, we'll be diving deep into the world of airlines. Buckle up for a turbulent ride.
We'll be analyzing their financial performance, their strategies for dealing with rising fuel costs and competition from budget carriers, and of course, their plans for the future of air travel.
It's going to be a fascinating discussion, so be sure to subscribe to TalkTickers and join us for that deep dive.
And in the meantime, if you have any thoughts or questions about Royal Caribbean or any other companies we've covered, feel free to reach out to us on social media.
We love hearing from our listeners. All right, that wraps up our show for today.
Until next time, happy investing, everyone.